Over the last 20 years, this stock have crushed the market. Monster Beverage 82,000%, Apple 51,000%, Nvidia 32,000%, while S&P 500 returned just 520%. This company grew 10, 50, even 100 times or more. So here's the $1,000,000 question. What if you could spot the next one before it becomes a household name? If you are tired of scrolling through hundreds of stocks, I've got a shortcut. Today, I'll show you exactly how to find long-term growth stocks using Finviz, a free stock screener to uncover high potential stocks that could change your life forever. What's going on, investors? Hopefully guys are doing well out there. Please make sure to smash the like button and let's begin. Now we are on the homepage of finviz.com and what we are looking for, screener. In a screener you can see there are multiple tabs: descriptive, fundamental, technical, news, ETFs, all. Don't worry, I will walk you through all of them and explain which filter exactly do we need to apply to find gem multi-baggers for our long-term portfolio. Before we apply any filters, I would like to pay your attention that currently we have 10,000 companies in the list. And let's start from the first filter. The first filter is a country. If you are investing in some particular countries, France or USA, you can go ahead to choose here the country. But if you're a global investor, you can just skip any, and that's also okay. For us, for our example, we will choose USA. The next filter is market cap. For the market cap, we want to find the long-term compounders which will 10x, 30x, 50x our money over the long term. In that case, probably Amazon or Apple is not the best stocks for us. So we would choose something like smaller, something which can actually give us high growth and high potential. I would go with medium minus, which is under $10 billion. And now we already have under 4,000 companies in our list. Very good job. The next tab we're going to is fundamental tab. In a fundamental tab, the first two filters are PE and forward PE. The price to earnings is showing the past data based on the past earnings. The forward price to earnings is showing based on the analyst expectations for the next 12 months earnings. But I would go with price to earnings growth, which will consider the forward price to earnings and also the growth. Because let's say I will ask you the question, we have a company which is trading with 100 times earnings. Is it cheap company or expensive company? The answer is there is not enough information, because if this company is growing 500% year over year, this is the dirt cheap company and I would buy this company all day long. But if the company is growing just 5%, probably this is the quite expensive company and we should avoid. So for price to earnings growth, I would go under 2. Ideally, I would go under 1.5, but because free version of Finviz is not allowing us to choose the decimal, then we will go with under 2. Having said that, the next filter is price to sales. We do not want to filter high growth companies which is trading expensive, because for the long term they still can give us high growth potential and high returns. So I would go with under 10 for the price to sales. The next filter is EPS growth past 5 years. We want to make sure that the company is growing and growing profitably. So we will choose over 15%. And you can see currently in our list we already have 79 companies. This is already very nice. If you are enjoying videos so far, please consider subscribing to the channel. On the channel I do fundamental analysis, I run the public YouTube portfolio, I do educational videos and much more. If any of that interests you, please welcome to subscribe to the channel, and we will continue with our filtering. The next filter we are gonna do is EPS growth next 5 years. Of course we cannot certainly predict what will happen in the future over the next 5 years, but what we can do is we can leverage analyst estimates to see if they are expecting this company continue growing over the next 5 years, and we will choose over 15% as well. And also we can leverage historical sales data to make sure that this company is fast growing. So for fast growing company we can choose over 20% to make sure that we have really growing companies. The next filter is a return on equity. It's showing the company's profitability, how much profit the company can generate from the shareholders' money. We will choose over 10%. The next thing we need to make sure is the company has a healthy balance sheet. And for that, we will use current ratio. Current ratio is measuring the ability of the company to pay its short-term liabilities. It's calculated by dividing current assets by current liabilities. We would go over 1.5. And one more thing, very, very important, we want to have profitable companies, but not profitable in terms of the net income. It's okay if company currently does not have positive net income, but we want to have positive operating margin. So we will choose operating margin positive. And operating margin is showing the proportion of revenue left after the company pays for the production and operating expenses. Healthy operating margin is required for long-term growth. And after we applied operating margin, we can see only 14 companies left. And now, very, very important, we are going to click this custom tab. And currently, we have just few fields here: country, market cap, PE, volume, price change. These are not very useful fields. So we are going to click settings and we're going to choose fields we actually need to focus on. Let me show you. The first one is PEG, price to earnings growth, EPS growth past 5 years, EPS growth next 5 years, sales growth last 5 years, return on equity, current ratio, operating margin, and that's it. And let's see what we got. So firstly, we have a 14 companies. This is already the best of the best, 14 out of 10,000 companies. But this is not the end. Now, what we want to do is analyze the historical data of these companies. For example, we can filter by sales past 5 years, and we can see that out of these 14 companies, the Celsius was growing 85% over the past 5 years in terms of the sales. And to see which company was growing most profitably past 5 years, we can filter by EPS past 5 years, and you can see that Onto Innovation and Clear Water was growing the fastest, triple digits over the past 5 years. Absolutely amazing. And also you can have a look at valuation perspective and also the operating margin. Here, all the visualization. And the next step is to do the fundamental analysis to see which company in this list actually deserves your money, which company you would like to bet to get 10, 20, 100 times return of your investment. If you are curious how I do fundamental analysis, watch this video next, because I recorded 7 simple steps how I am leveraging AI and increasing the productivity of my stock research significantly. Thanks for watching, and I will see you there.